Hello again from Core Wealth. It's good to be back. Last month, Steve and I were in the UK visiting a number of different managers. Some of you may have seen the video that we sent from the London Stock Exchange. But we're back into the normal swing of things, and we'll be covering what happened in the month of June in financial markets, and also having a look at what has happened so far for the first 6 months of this year. So if we look what happened in global markets, the big one being the US equity markets, up strongly. The S&P 500 up 14% for the first 6 months of this year, but again, driven by very, very few stocks. And that's something that remains a concern. And we have seen the US market slowing down a little bit, or rather not the market, the economy. And that actually is a good sign because inflation is starting to slow down a little bit, and that will mean that interest rates can start to be reduced by the Federal Reserve in the US. So the Federal Reserve in America didn't reduce interest rates at the June meeting, and the expectation is that they'll start cutting in September and probably again before the end of this year. So 2 rate cuts this year are expected. What we've seen is that in Europe, they've already cut rates, first time in 5 years. And what is happening all around the world, and we'll talk about South Africa in this regard shortly, is elections. And we have seen some movements happening in France, and they have called for early elections there. And that saw the French stock market weaken actually quite a bit in the month of June. India, on the other hand, they had a favorable outcome. The current president, Modi, was re-elected and able to put together a coalition. And so we've seen their stock market actually rally quite strongly, although it does look quite expensive at the moment. You'll see from the next set of slides we go through that the emerging markets had quite a strong month. That was on the back of actually AI interest. There's a big chip manufacturer in Taiwan that pushed their stock market up quite strongly. And then the positive news I just mentioned about President Modi in India, that also pushed the Indian stock market up. So we saw a good month for emerging markets. So at the end of May, we had our South African national elections, and those results came through in June, and we've seen a peaceful transition from the previous incumbent, the ANC, having had dominance in the political landscape for the last 30 years, that now transferring to a number of different parties. And the government of national unity has been formed, so power has been transitioned peacefully and well, and the markets have really reacted well to this. Our equity markets up 4% for the month, our bond markets up very strongly, the rand strengthened in the month by 3%. We saw sectors like our banking sector really positive on this news and up over 14% in the month. And we've seen foreigners coming back into our bond market, and we expect that to continue also into the equity market into the future. So a really nice tailwind in the expectations for how South Africa is governed from a competence and lack of corruption point of view into the future, really being well received by the markets. And we think it'll be good for the country as a whole, how this election has panned out. So let's have a look at the world markets in US dollar terms. What we can see here, if we just look at the month as a whole, equity markets and global property all up quite nicely for the month, but US equities and Japanese equities still the place to have been. Emerging markets, as we mentioned earlier, also did well. That's despite China actually being down quite a bit for the month. If we have a look a little bit longer term over the 1 year, the picture is very much seen some nice turnaround in the European and UK and Japanese equity markets. But if we have a look longer term, the US has definitely been, this last decade and even 15 years, has been the place to have been. It's been the US, but we've seen some good returns come through from the Japanese equity markets, and the UK actually not looking too bad over 15 years either. Let's have a look at the South African markets. These are all in rands, and we can see the month of June, as we said earlier, was a really good one. Equity markets up over 4%, listed property up 6%, and the bond market up 5.2%, all in 1 month. And that's just on the back of the positivity coming from a really good election outcome and good prospects for the future. If we look over the last year, we can see that equity markets still a little bit light at just over 9%, listed property over 26%, something we've held for our clients who are drawing regular incomes, and that's been really good for them. Bond market up almost 14% for the last year, again really, really positive. And the South African rand strengthening against all major currencies over the last year and over the last month. Longer term, we still think that there's more to come for South African equities, and we'll talk a bit about that later in this presentation. So let's have a look at how these markets have filtered through into our clients' portfolios. We'll start looking at our global strategies, and this slide shows those that are denominated in UK sterling. And we can see over the last year some really good outperformance of the peers. Those are the green blocks, and our defensive and balanced strategies outperforming peers quite nicely. Over the last year, our growth strategy, the more aggressive one, is slightly behind peers over 1 and 2 years, but all of the strategies outperforming their peer groups, and some of them quite nicely over the last 2 and a bit years. In October, or rather in September, we'll have a 3-year track record on these strategies. The next table just shows our global strategies, but for those clients who are thinking in US dollars. And here we can see this strategy has a much longer track record, going back to November 2016, so nearly 8 years now. And again, some really good outperformance. In absolute terms, the growth strategy over the last year has returned almost 12%. And since inception has given 7.3% after fees, and that healthily ahead of the competition. So some really pleasing results on our US dollar strategies over the long term. So here are our South African strategies for our rand-based clients, and these track records go back, some of them up to 12 years. And what is really pleasing to see, again, mostly green, in other words, we're outperforming our peer groups. But some of the things I'd like to highlight, if we look at the 5-year column and we look at our retirement growth strategy or our core wealth flexible strategy, some of our more aggressive type strategies, those two healthily ahead of the peer groups over 5 years. But in absolute terms, the retirement growth strategy at 11.2 and the flexible strategy at 12.7, inflation over that period in South Africa was 5%. So that means that you've had between 6.2 and 7.7% growth ahead of inflation, which is significant, and that's on average over the last 5 years. So some really nice pickup that has been happening there. And then the since inception numbers, again, all of them comfortably ahead of their peer groups, which is just showing that we are able to add value to our clients' portfolios. What we're going to do is have a look at the South African equity market now and what we expect going forward. And what you can see on this graph here is that the South African equity market rallied really strongly from basically from COVID up for the next 3 years, up some 90-odd%. And some investors didn't have exposure to South Africa at that stage, especially a lot of foreigners, but that was a really good place to have been for that 3-year period. Better than being in the US, better than being in other emerging markets around the world, as the graph on the right-hand side shows. What we're going to do now is have a look, if investors did want to get into South Africa, South African shares now, is it a good time to be doing that? So we're going to have a look at whether the South African equity market will be more popular or not in future. This graph shows the forwards price earnings ratio of all different stock markets, the US, Europe, emerging markets, South Africa included. And you can see back when we started looking at this, which is in 2014, South Africa, the light orange line, was at similar levels to Europe and the US and the rest of the world. What has happened over the next coming 10 years, which is when we've had load shedding, we've had corruption happening, we've had concerns around the logistics in South Africa, Transnet falling over basically, Eskom being a mess. We've seen that light orange line has fallen to the bottom of the list. In other words, it's become less and less popular. We're going to unpack now whether we think this will persist into the future. So the area that was a headwind for so long in South Africa that everyone's aware of is Eskom. This graph here has a look at the number of days in each calendar year that we had no load shedding. So in 2023, it was disastrous. Only 30 days in 2023 existed where there was no load shedding. Interestingly, so far, or up to this graph looks at up to the 4th of July in 2024, we've had 100 days of no load shedding. And you can see how the graph deteriorated through time. The question is that a real turnaround? And there was a lot of skepticism running up to elections that this was just an electioneering ploy, and the ANC were just trying to make it look like they'd fixed things. But actually, it wasn't as sinister as that. Now, the reason why Eskom is so important is because we need power to grow as an economy. And this slide just shows the number of new electricity generation plants that have been built in South Africa, predominantly by the private sector, and how much energy they've created. The blue line shows you how much energy in gigawatts, and the purple line is just the number of facilities. And essentially, we've seen over the last 3 years, we've seen 6.5 gigawatts of energy being added. In addition to that, Eskom has been fixing Kusile, and so there have been 800 megawatts added at Kusile. So South Africa is in a much stronger position in that A, it doesn't need as much electricity because the private sector is generating so much of it, and Eskom is slowly being repaired. Second big drag on the South African economy was the logistics sector. And on this graph, we're showing you the volumes that Transnet was moving from different sorts of minerals. But basically, the government, in collaboration with the private sector, set up the National Logistics Crisis Committee, and they looked hard at how they get logistics working again in South Africa. They appointed a foreign player to run the Durban Harbour, which accounts for about 46% of container traffic in South Africa. Management has been changed at Transnet. They are turning things around, and we've seen an improvement there since that change was made. So while the volumes in this graph show that they've fallen off considerably over the last 3 years, the expectation is that over the coming years that will turn around, and that, instead of being a headwind as it has been, will now become a tailwind, and we'll start reaping the benefits of that. Politics is always a very emotive subject, but what we can say in South Africa is that we have definitely matured as a democracy. This graph just shows you how the main political parties have how their support has grown or reduced through time. And we can see here that back in 2004, so only 20 years ago, the dominant party was the ANC, and it had 70% of the national vote. That is now reduced down to just over 40%. But the transition of power has been peaceful, and it has been sensible, and really just a strong indicator of the maturity of a large part of our democracy. The Government of National Unity has been instituted, and there are some areas that some people aren't going to be happy with, but I don't think that that's untoward. And if we have a look at these types of coalition governments globally, that is a normal fact of life. What will happen over the coming years is that we should see a turnaround in how some of those departments are being run. And the market has reacted very strongly to that, as I mentioned earlier in this video. We're not out of the woods. There will still be bumps along the road, we expect, but we do think we're on the right path. And the positivity that's coming from foreigners looking at this and seeing the change is really good for the country. So this graph just shows you the price earnings ratio on the Johannesburg Stock Exchange, and we can see that it's at one of its cheapest levels in a very, very long time. That attractiveness of valuation, together with the positivity that I've just mentioned, that is coming from the fact that some of the things that were headwinds are being sorted out, or have been sorted out, and are now becoming tailwinds. South African businesses have in general always been run quite well, and through tough times businesses tend to get even better. They're forced to. And so we think this could be a really good platform from which we see really good growth in our equity markets over the coming years. So while a month ago we were in London and also went through to Cyprus to see Mike Savar, who's based there now, and meet with some potential Cypriot clients, it is good to be back in South Africa. As you can see, we're supporting the Springboks. This coming weekend is the second test against the Irish after winning the first one. Great spectacle of rugby. But if you have got any questions, not so much about rugby, but more around your investments or anything, please do give us a call. We'd love to hear from you, and go Bokke.